They call it the housing freeze. Fewer selling, fewer buying. And many recent homeowners are discovering unexpected costs. Nearly half now say they regret their purchase. Why? Because the true cost of ownership goes far beyond the mortgage. New data shows that hidden expenses are averaging $16,000 a year. Today, we'll break down 5 key trends reshaping the American dream into a financial strain for many households. We look past the Zestimate to see what owning a home actually costs right now. The numbers are not pretty. If you want to prepare your finances for the biggest housing realities of 2025, show your support by hitting that subscribe button and turning on notifications. We deal in data, not dreams. Let's look at the facts. The U.S. housing market in late 2025 is defined by 2 words: freeze and squeeze. Freeze. Only 2.8% of homes changed hands this year, one of the lowest turnover rates in decades. Many homeowners are holding on to 3% mortgage rates from 2020, creating market gridlock. Squeeze. While those rates are low, carrying costs are rising sharply. A Zillow and Thumbtack report shows hidden costs have surged to nearly $16,000 per year, about $1,330 a month beyond principal and interest. We'll break this down into 5 key areas. Part 1. The insurance surge, 48% increase. The first and most aggressive hit to homeowners' wallets is insurance. The data. Since 2020, homeowners' insurance premiums nationally have risen by 48%, but that is just the average. Regional impact. In Florida, premiums are up 72% in 5 years. In cities like New Orleans, they are up 79%. The trend? This isn't just about inflation. It's about climate risk repricing. Insurers are leaving states like California and Florida entirely, leaving homeowners with few options other than state-backed insurer of last resort plans, which are extremely expensive. The reality? For a family in Miami now paying $4,600 plus a year just for insurance, that is a monthly bill equivalent to a car payment, adding a new monthly burden. This is a mandatory cost that increases financial pressure even if your mortgage is paid on time. Part 2. The $10,000 plus maintenance reality. New homeowners often budget for the mortgage but forget the roof. In 2025, that forgetfulness is costly. The same Zillow analysis found that the average homeowner is now spending $10,946 annually on maintenance and repairs. Why? The cost of labor and materials has not come down since the pandemic spikes. Getting a plumber, an electrician, or a roofer costs significantly more today than it did 3 years ago. The reality? If you bought a home stretching your budget to the max, you likely don't have an extra $900 a month lying around for maintenance. So when the AC dies, it often ends up on a credit card at 22% interest. This creates a maintenance debt cycle that is quietly affecting thousands of middle-class families. We're just 2 points in, and we've already found over $1,000 a month in hidden costs. If this data is helping you see the full picture of the market, please hit that like button. It helps us inform more buyers before they sign on the dotted line. Part 3. The lock-in effect, trapped in place. We mentioned the freeze earlier, but let's look at the financial toll of being locked in. The trend? Mortgage rates are hovering between 6 and 7%. If you have a 3% rate, you can't afford to move. The problem? You might have a growing family and need a bigger house, or you need to move for a higher-paying job, but you can't. Moving would significantly increase your interest payments. This creates a labor mobility crisis. People are turning down better jobs in other cities because they can't afford to swap their 3% mortgage for a 7% one. This stagnation hurts your long-term income potential, effectively limiting your financial growth by keeping you tied to a lower-paying location. Part 4. The property tax catch-up. While home prices have flattened or dipped slightly in some areas, tax assessments are often based on the peak values of 2022 to 2024. The data. Property taxes alone are now costing the average homeowner $3,030 a year, but in high-cost states like New Jersey, Illinois, and Texas, it is often triple that. The 2025 trend. Local governments are facing budget deficits and are aggressive with assessments. Even if your Zestimate didn't go up this year, your tax bill likely did. The squeeze. Unlike a mortgage, which usually stays fixed, taxes and insurance float. They are the uncontrollable portion of your housing payment. And right now, they are the portion that is rising the fastest. Part 5. The regret epidemic. Buyer's remorse. All of this financial pressure has led to a massive shift in sentiment. The American dream is feeling more like a burden. The data. According to a recent Bankrate survey, nearly half, 45% of homeowners, say they have regrets about their purchase. The number one reason? Maintenance and hidden costs were higher than expected. The reality? We're seeing a generation of house-poor buyers who won the bidding war in 2022 or 2023, only to realize the ongoing costs were far greater than expected. They have equity on paper, but they are cash flow negative month after month. They are asset-rich, maybe, but cash-strained, definitely. The lesson for 2025 is clear. The price of a home is not just the mortgage. Insurance is spiking by nearly 50%. Maintenance is an $11,000 a year invisible bill. The lock-in effect is hurting career growth. Taxes are catching up to peak valuations. And regret is at an all-time high. If you are thinking of buying, you must budget for the PITI plus M, principal, interest, taxes, insurance, plus maintenance. If you don't, you risk joining the millions of Americans managing financial strain inside their own homes. I'm curious to hear from you. If you own a home, how much has your insurance or tax bill gone up this year? Do you feel locked in by your current mortgage rate? Drop your answers in the comments and subscribe for more educational content on personal finance. Thanks for watching.